Hey, this is Mac with PriceActionTradingSystem.com, and today is Thursday, November the 1st. This will be our chart lesson for today. And we had a really strong trend in the overnight and the early part of the morning. But then it didn't last very long, and then we went into this trading range and we really spent the majority of the day in this trading range, which I'd say started at around 9:30 and lasted all day. So if you didn't catch this first hour of the trading morning, then you didn't have a lot of chances to make a lot of money. So I'll talk about each of the trades, but this trend line was right off the first couple of swings here. By the time the market opened, you should have had this. When I first started, I wasn't sure if it was like this, and that could be accurate as well, but I believe this was the trend line. If you caught these first couple of swings right in here, and that seemed to hold it the rest of the day. So I believe it was these closes, and actually I think I originally had it drawn like that right there, and that still works. And but that got the first couple of closes up through there, and it caught those couple of swings from the overnight as well. But later I got it off these highs and then drug it down. So you got pretty much the same thing either way. But that's what I believe it was right there. Pretty much right there. Then we had the break here, and we got two legs up to a new high, and then we kind of sold off, and then we kind of spent the rest of the day in the range. And I'll talk about that as we get up there. But let's back out here and talk about the trades, first few trades. And this is what you would have seen when you first came in this morning, looking pretty much like that. Excuse me. And you may not have had this line. You might have had this line like so. But once you started to get a few turns right across there, that was a good sign that this was a tight range. And you can see when we finally got an overshoot right there, we kind of went into a range. But the market was just too strong, really, to start selling off. And then even when it did, we kind of found support and never could get back below 1950 or so right there. But this is where the market opened, and I marked this one because it's really a breakout pullback long, and we were not touching the upper trend channel yet. So we came back and touched it here, and we pulled back, and that was close enough. So I felt like this was a pretty good trade, and it stalled for a minute, but it took on off. No runners on that one, unfortunately. But then look what we had. We had a nice two-legged pullback. This is a second entry long, a two-legged pullback back to the trend line, and we had a nice little green bar that almost closed on its high. And it's a doji, but you see what happened? We broke out and we pulled back. And so you could have gone long here, but this one was getting more risky because we were getting close to this high here, and we had just come off the upper side. So the better entry really was here. But if you entered here, I probably wouldn't have ever entered here, because then you got two dojis in a row and you got three overlapping bars. Two of them are doji. But this was a good one because look, you had all these overlapping bars, and we broke out and broke lower, bounced off the trend line. And what happens when you normally break out of congestion or all these overlapping bars? Prices snap back. So prices are going to snap back. They're probably going to come test this high, and we're probably going to even go higher because look at this trend. So this was a great setup right here, in my opinion. And if you waited till here, then I would have been nervous, because then you got another doji, and you got three bars in a row, and two of them are dojis. But that thing took on off, and this time your runners were easily safe, and so you could have ridden this all the way to the top. At the very least, you could have got out in here somewhere. But once we made this new high and turned back down, that was probably the place to exit. And that did turn out to really be the high of the day. I think we went higher right at the close, but by that time you should have already been out of the market anyway. So if you exited on this new high here that turned back down, that would have got you out pretty much at the high of the day. So this was a great trade. And then we overshot it here, but this is a good example of why you don't want to counter trend trade, because even though we overshot that trend channel line, look what happened. We never really went lower. You just got stuck in here, and we finally touched the trend line again, and guess where prices shot off again? On that trend line. And so this was another good entry here because it's a reversal bar off the trend line, and we shot on up, and then we went right into another kind of a trading range. So now you can see we're starting to lose a little momentum. We pulled back to the trend line again, and you can see this time, you know, there was no setup until we touched the EMA. And that's the first touch of the EMA all the way up through here. So you just about got to take that one. Again, it took a minute for this one to take off, but, you know, another easy scalp. No runners on this one unless you exited up here in all this overlap, which would have been probably a pretty good place. And then prices pulled back. And there was another long right here. Again, notice those two legs back. And I get a lot of questions about these, but hopefully you can see this. There's a move down, and then look at that green bar. It's a move up, and then your second leg down. And if you measure these, there's leg one, then your little correction in there, and then there's leg two. A perfect measured move there. And so that's two legs back. And so, and you got this little negative, or this bearish looking bar, and we broke below it and turned up. And so even though that's a doji, you know, I always tell you, if you're not good with reading the price action, ignore the dojis. And look, it didn't go very far. It was good for a scalp. And so it got just enough for a scalp, and that was a good trade. And then it turned down again. And so then you got to be thinking, hey, maybe we'll get a measured leg to this one. There's that leg. You measure it. I'm going to get it exact just so we can see how close it is. I like to see. It's amazing how many times these will be exact moves. There's leg one, and there's the next move. And notice it went one tick lower. And there's already support here. This was resistance. Now it's acting support. It acted as support twice. It's two legs back. And, you know, once you get two legs, then you're figuring the trend may take off again. And look at that move. So this was a nice entry. Again, it's a second entry long on this bigger picture. Really, it's a second entry long, even if you're just counting the break above the next bar. So even, you know, there's two legs in this move, but then this is a single leg, really. And off we went. Any runners would have been safe on this one. And you could have ridden this all the way back up here to this high, and I would have exited when that bar ended as a doji. And because now you got a failed break higher, so you want to exit right there. And that's where I exited, and turned out to be the high of the day on that trade. And then we were working down, and you can see there's actually a channel there. What I did was, once we made this move down, I drew this line off these first two swings. I copied that line and carried it up. And so then I was looking for that area to be where we would get a turn. And look at that move right there. And look how, where do I always say you get the best moves? It's off the trend line. And look, that thing shot down. And you wouldn't have got any runners on this one. You would have came back and got them. But then you got another one right here. And usually your best entries are off that trend line. And I didn't take this trade here. And this was not a good trade, because now look at all this overlap. We've been in this for quite a while. We're down here at this strong support area, so this is just not a very good trade. Good time to skip it, and I think it still would have worked. Your entry would have been 1975, and it got just like normally. It got just enough to get you out, but it wasn't worth taking that trade because it was really suspect. We'd been in that for 12, almost over an hour right there. And then notice we finally broke lower, went up, and you got a look at that reversal bar right there. That is a great sign. When a bar trades down that far and then it turns and runs all the way to the top and closes on its high, that's telling you something, especially when it's a bounce off what was the support area across there. And now we broke below it. We came back. It tested it again. It held. It reversed. So that was a nice place. Didn't get much more than a scalp out of it. But it was still a good trade. And by that time, it was too late. I didn't mark anything after that. And this is a couple things I want to talk about, and then I'm going to wrap it up, make it a little shorter today. The bias, once you go up and go into a range like this, we traded up into this range. So the bias is we'll probably fail out the low side, and if we succeed in trending again, we'll probably go out the high side. And that's kind of what happened. It didn't go very far yet. That may be all you get. You may fail out this side and may come back down, and we may spend all day in that range again tomorrow. Who knows? But the bias is to, actually I missed a trade. I'll go back and talk about that one too. This one I marked in green. We had the break of the trend line right here, and then notice this. We had one leg up. That's it right there. We had two legs back, and those two legs are important here because once you get two legs, the odds are you're probably going to get some more. And then if you look over here, another almost perfect measured move. So now you got the break of the trend line and two legs to a new high. That's a good sign that maybe the trend it could reverse. However, that doesn't mean necessarily the trend will reverse. It just means once you see that, generally what's going to happen is you're going to get a bigger correction that's going to last at least an hour. And let's see what time we went into this. About 10 to 11. And it ended about 10 after 1. So that's a 2-hour correction right there. And you notice there's not much movement in there. So that's enough to be a correction. It doesn't, just because we got a trend line break and two legs to a new high, it doesn't necessarily mean you're going to get a reversal. It just means you're going to get a correction that lasts at least an hour. And you see that one lasted about 2 hours, and then we started trending higher again. And really you could call that a trading range across there. So there's a couple of different ways that you can work that without necessarily even knowing the rules to the trend line, to our trend line breaks and so forth. So just something to think about there. And now something else somebody asked me about today. They sent me an email asking about overlapping bars. You hear me talk about overlapping bars quite often. And when I'm talking about overlapping bars, I'm talking about congestion. That is congestion. That's what I mean by overlapping bars. I mean, I'm not talking about, you always get a tick or two or so of overlap on every bar, but you can see that's still trending higher. This is not trending higher. This is congestion, or this is just a smaller range. And a doji is just a 1-bar trading range. So when I'm talking about overlapping bars, I'm talking about stuff that looks like this, stuff that looks like this. Yeah, there's some overlap up through there, but that's still trending higher. Each bar is making a higher high and a higher low. Look right, come back over here. These bars are not making higher highs and higher lows each time. They're random. They're making, they're kind of staying within a little range. So when I talk about overlapping bars, I'm talking about congestion, and that's areas like that right there, this right here. That's congestion right there. That whole area right there is congestion. This is pretty much all congestion right in here. That's congestion. That's congestion. And we really, the whole afternoon, you see how weak the trading, that right there is congestion. That is to a degree, but notice we broke below it and turned back up. That's congestion. This whole area right in here is pretty much congestion. So hopefully that makes sense to you. If you didn't quite understand that, just because you got some overlap, that doesn't mean anything. There's overlap all the way up through here, but you can see we're making higher highs and higher lows, so the market is trending. And there's even a lot of overlap right up through here, but the market's still trending. It's when the market stops trending in either direction, and like that right there, and like this right here, that's what I'm talking about when I'm worried about congestion that you don't want to trade out of. And those are not good places to enter because you never know what's going to happen. So you got to wait on the failed breakout. Like here, we failed out the top, and then you could have gone short, and then finally we failed out the bottom here, so then you could have gone long. And I didn't mark those because they're not great setups, but that's how you have to trade that, just like you do the bigger range here. We failed out the bottom of the bigger range, so you could have gone long there, but I didn't like that because of all the overlap. it was better to wait till we got a second entry, and there was your second entry. You see there, you know, when you make a new low going the other way, there's your first entry, there's your first leg. All we're really looking for is two legs, and then you get a pull back, and then we come up, and so here, this is the start of the second leg, so that's your second entry. And let me show you this right here just so you can see it. And here was your first leg, so you got to figure this next leg is going to be similar. And look at that, we actually went a little bit higher there. So enter here, you're looking for us to come back and test these highs right across here. That's where the resistance is, and that's where the target is. And notice how nothing closed above that. Even though we went higher, nothing closed above that. So that tells me that I wasn't the only one looking for prices to turn down right there. And we got stuck in there for a while. We broke out, turned down, and then look, boom, it's off to the races. And look, there's two legs right there. This is why second entries are so important, because you got one leg down, and then there's your next leg. And it didn't make it down there, and that's a sign that we're probably going to go higher. And so I'll talk about that real quick. Notice that we broke below this. We came back and tested it. We two legs down again, and we couldn't get down there even as far this time. And notice how there's no closes down in here. So that people were looking to buy down here every time it came down here. And finally we went higher. And so that's a good sign when you start to see that this trend that was working down is now starting to lose steam, and things are going higher, and we're making higher lows and higher highs and higher lows. So that's a good sign after two legs back that now you're probably going to get a leg. Since you got this two-legged correction here, you got to be thinking, if we go up, what led into that two-legged correction? That leg right there. So now you got to be thinking about that. And look at there. That's exactly what you got. Notice there's no closes, and then it came back and it closed out the day right there. So that's why I'm always talking about two-legged moves and second entries, because the market moves in twos. And as you get used to looking at this stuff, you'll start to spot these things. So if you get a move, if you've got a trend that's going in one direction, and then suddenly you get two legs in the opposite direction that end at a higher spot, then there's a good odds you're going to get two legs in the other direction. And I might have already shown you this one, but even though you were looking for one leg here that you got right here, notice going up that you had one leg, and then there's your next leg. This stuff happens over and over and over and over. So if you start to incorporate that into the other things you're looking at, it's probably going to help you. So I was going to try to make it shorter today. We're under 20 minutes, but it's still longer, and I've tried to keep this one around 10 or 15 minutes today. But these were all important things people asked me about that I think are worth talking about. So I like to talk about them and point them out to people to help you learn to see them. So, but I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.